One of the unquantifiable risks we talk about here at River One Asset Management is called stroke of pen risk. It is when the government walks in, changes the game, and changes your earnings substantially. That happened to United Healthcare. This stock is down 48% in about a month. Let's take a look at what's going on there and whether or not it's a buy down here. So let's start by comparing the sheer scale of United Healthcare so that everybody understands how big and important this company it is. First of all, it insures 15% of Americans. And let's take a look at 2023 numbers for UNH. They are $370 million in revenue, $22 million in net income. The company's worth about $500 billion. Let's compare that to 2020 Amazon.com. The revenue's almost exactly the same. The net income's almost exactly the same, but the enterprise value is 3x where UNH is trading currently. The value investors love this thing for this reason. They were all stuck in it. Let's take a look at where UNH is going to figure out where we should buy this thing. So United Healthcare is probably not going to grow top line or bottom line like we were thinking. Let's make some really gray sky predictions as to what might happen at United Healthcare and decide where the numbers and where the market cap should be. First, let's start at revenue growth. They were expecting 13% top line. I'll bet that's probably not going to happen. We're going to use a 3.5% revenue growth number. That takes them to about $425 billion in revenue. Here's where United Healthcare really gets hit most likely is the margins. 8% net income margins, 6% in the latest quarter. We'll bet those go down somewhere near 4% margins. Take a 4% margin, multiply it by that $425 billion new revenue number, and you get $17 billion in net income. And so now what multiplier to use on that net income? Let's take a slightly below market net income here of 18x, multiply it by this $17 billion, and we get a market cap of $306 billion, currently trading $290 billion. So there is already a little bit of value down at these prices in United Healthcare using these gray sky predictions. So stroke of pen risk got to United Healthcare. The stock has sold off 48% in just over a month. We think you should keep your eye out for this throughout the rest of the quarter or around the $300 level because it looks to have a decent amount of value at that price. Thanks for watching. As always, like, subscribe, all that good stuff. Send it to your friends. We appreciate you. And if there's anything you want to see, let us know.